This is a big gorilla, is what to do about Fannie Mae and Freddie Mac. Currently, between Fannie Mae, Freddie Mac, and the Federal Housing Administration, more than 90% of the mortgages in the United States are being funded. So there's a reason for this, which is in the aftermath of the Lehman Brothers collapse, there essentially was no private sector funding for mortgages. And even now, if you want to get a jumbo loan in California, that is a loan that Fannie Mae and Freddie Mac cannot buy, you are held to very stringent underwriting standards. You can get them, and that's an improvement over a year ago. A year ago, basically 30-year fixed-rate mortgages that were not funded by Fannie and Freddie were just non-existent. You usually had to get a 5-year adjustable rate mortgage. But now there is a 30-year market again, but you have to have very strong credit history, typically 740, 760 plus FICO score. And in the old days, it was 680 was considered a good, strong credit rating. So 740, 760 is very stringent. You need 20 to 25% down. And the other thing lenders are demanding is 10% of the value of the loan in reserves. So in other words, you have to make a 20% down payment minimum, plus you have to have another 10% in liquid assets, so that if anything goes wrong, you have money to pay down the mortgage. So the private market is being very, very careful right now. And so it's no surprise that Fannie and Freddie have the lion's share of the business. The thing is, at the same time that they have a lion's share of the business, they're costing us a lot of money. Now, it's important to remember that it's not the new business that's causing us money. The stuff that they've been underwriting since about 2008 is doing just fine, because that's when house prices reach their bottom and people don't have incentives to default anymore. So the newer stuff that they're doing is pretty good. But we keep having surprise after surprise after surprise about the older stuff. We like to think that they were doing very safe business, but now they were doing loans such as Alt-A loans, which are alternatives to prime mortgages, that are not doing well. They bought securities that had subprime mortgages in them. They are not doing well. And so we don't want that to happen again. We don't want Fannie and Freddie to be able to get into a dangerous business again with a taxpayer behind them. So what to do going forward? Well, there are people who advocate just privatizing the agencies. Do something like reduce the limit at which they can lend by $100,000 a year for 7 years, and then just put them out of business. I think it's an open question as to whether Americans would want that, because when we look around the world, we see that the United States is the only country with a 30-year fixed-rate, prepayable, self-amortizing mortgages. You can find other countries with one of those features or two of those features, but it's that combination of features that's very unusual. The exception is Denmark, but Denmark, you need to have a very large down payment in order to get a mortgage. And so we need to ask ourselves the question, as a country, do we want to go away from the standard mortgage that we've had in the United States, pretty much going back to the Great Depression, the aftermath of the Great Depression? And that's a reasonable debate to have. There are people who argue that the fixed rate mortgage is overrated and that we could go to a variable rate market such as they have in Canada or the United Kingdom. But people need to recognize that if we got rid of Fannie and Freddie, it's likely that that would happen. So if we have Fannie and Freddie, what will it look like? I suspect it will have a couple of features. First of all, they will be strictly in what's called the guarantee business, which is to say that they insure loans, they don't own loans, and they're in a backstop position. So once a loan is underwritten, and I think the key to underwriting is what's called a credit enhancement. You either have a large down payment or you get mortgage insurance from the private sector. The borrower will pay a fee, such as they pay FHA for a guarantee. And if something catastrophic happens, such as Nevada, again, then the government steps in, but it's all very explicit. Nobody is saying, well, you know, wink, wink, nudge, nudge, that these guys are public sector when they're saying that they're private sector. And so that will be a fundamental reform. I think if they exist in the future, they will be explicitly federal government entities. The tough issue that people are not coming to grips with, and I don't see a lot of discussion about this, is the multifamily market. Because like the single-family market, Fannie and Freddie basically are the business. There's very little private sector lending going on in multifamily. And you have an issue of how to get the private market going while Fannie and Freddie are in the business, because they can lend at such low rates under such favorable terms that the private sector is incapable of competing. We call this crowding out. So Fannie and Freddie are right now crowding out the private market from funding apartments. We want the private market to come back, and in order to do that, we're going to have to scale back Fannie and Freddie's business in this market. But the problem is everybody's afraid that if we start scaling back, we'll see the sort of cataclysm in multifamily that we've seen in the office market, in the shopping center market, and in the residential market. And so it's sort of, you have two bad choices. Either you pull Fannie and Freddie out of that market and see what happens, or you keep them in the market and keep the private sector from going again. And I've yet to see someone have a brilliant idea about how to overcome that particular dilemma. But that's something I think we need to be talking more about.